Hey guys, welcome back to the Big Data Show. I'm your host, Nate Latimer, and I'm excited about our guest today. We've got my buddy, Hector Perdomo with Angel Business Inc., which is a resourceful company. If you are in a position to where you need growth expansion capital, maybe credit repairs hindering you a bit, or if there's something about your business that needs to be tweaked. This is a man of resources, and he's done a lot of great work for me. So wanted to have him on the show. So Hector Perdomo, everybody, thanks Hector for being here, man.
Thanks for having me, Nate.
So Hector, give us your quick background on yourself. What you did prior to being the CEO of Angel Business Inc. The guy's a serial entrepreneur.
Yeah, so from North Boston. I was there till I was like 4 or 5 years old. Nothing really going for us there. So my dad we came down here to like Disney one year. My dad's like, yeah, this is the spot I want to raise my kids. My mom was pregnant with my brother. This is where I'm from, is not a good area. So we came down here, and honestly, like that's where, like at the age of 13, I started like my own company. I was lawn mowing company, door knocking and stuff like that. And I was like, I like making money for myself. You know what I mean?
Sure.
I learned a lot. Like my dad, I always say, like, I don't know if he did this on purpose, but he was teaching me about business. My dad, again, he didn't make it past his freshman year in high school, but he knew he wanted a better life, for his family. And like I was charging 25 a lawn, and he kept like 20 of it, and I kept 5. Taught me a couple things in business, like you don't keep everything you make.
Right.
But that kind of like started. I was very competitive in sports, so I played basketball in my life, and I bring that competitive edge to business. So even if there's a resource I don't have, somebody's like, you can't help us with this. I'm like, watch me. So I go like look, study, see where I could find that resource, and then bring that in-house to my consulting company. And now if a client needs XYZ done, like systems or whatever done, like I know I have a place to bring them. And then I'll learn a little bit about it just so I can at least have conversation about it.
Sure.
But bring them, bring them to the right person.
Yeah, you're like glue. You like kind of quarterback whatever's needed for that particular client so that they're in a better position based on what their ultimate goals are. So is that sort of your process? Like, some of the notes that I have here about, just Angel Business Inc. in general is, it's a consultative approach, right?
Mm-hmm. Yeah, absolutely.
And, you specialize in profitability, efficiency, cost controls, sales growth. So can you share sort of how like those core values were established and how they reflect the services that you provide?
Yeah, so I started I've been on the phones, since I was 20 years old. So call center experience when back in 2017, I started my own call center for B2B. My first time exploring the B2B space. And it was getting like merchant cash advance loans for clients.
Love those guys. You used to be one of those guys, right?
I got out of it really quick because that's when I noticed, okay, I get money for this client, but they don't really understand how to use the money for their business, right? Where again, learning from what I learned when I was 13 years old, I make 25, I don't keep it, right? Like where does the money go to help grow and expand? Most people aren't prepared to pay a daily withdrawal or
no,
a weekly withdrawal.
Exactly. I fell victim to it. So like to the listeners, if you haven't been in this position before, let's say you're a startup company, and there's peaks and valleys as you're growing your just your Rolodex, like your pipeline of clients. Sometimes you have great months, sometimes you have bad months. In the beginning, it's a lot of ups and downs until it starts to level out and starts to be predictable revenue. It's nice to have some sort of a lifeline, or sometimes you're just holding your breath, like wondering, like, oh man, am I going to be able to pay everybody this month? So whenever that happens, like, okay, well, I need money now. So that's whenever, you start looking into like some sort of like short-term business loan. So the merchant cash advance guys will come around like vampire vultures. I'm just going to call it what it is. So explain to us, just so they know what you used to do and how you got out of it, why you got out of it, and what you're doing now is so much better. And by the way, I have mad respect for what you're doing now because you've been a tremendous help to me. So
Yeah, absolutely. And that's what I noticed. Most people can't handle that. They're like, okay, cool, I got 50,000. I got to pay back 75, 80, 90,000. I've seen some horrible, they call factor rates, right?
mhm.
And not everybody understands how to pay that back, right? So I noticed that a lot of my clients, they were defaulting on their loans.
So explain what it is exactly.
Yeah, so let's say it's
What
in
people don't
advance. Yeah.
understand. Yeah,
So it's like, the payday loans, right?
sure.
Where you pay it back, but hey, and when you get paid again, you gotta pay like 100 and something percent interest back.
Yeah.
You know what I mean? Like usually with them it's 150% interest back.
It's pure
Horrible.
rape.
But
It's rape.
there's not a lot of laws when it comes to business lending,
Right.
right? So that's where they kind of get away with that. Now, a merchant cash advance is like, let's say a 1.5 factor rate means you're paying back, let's say you take out $100,000, you're paying back $150,000, but it's short term,
Sure.
right? So what they're doing is they grab, let's say that $150,000 that you have to pay back, divide that by, let's say it's a 3-month term, divide those 3 months by how many days are in business days in a month,
Mhm.
and they're taking that money every single day out of your account.
Which
or
makes it
per week.
extremely difficult to manage your cash
Very.
flow, because it's a pipeline. And if you're not an established business that has predictable revenue with
Mhm.
like a strong CRM, customer retention management system, to where you can say, okay, this rep has got this many deals in the pipe, this rep's got this many deals in the pipe, so we should be able to predict that we're going to have this much money coming in based on a confidence score of this rep always, like, closing his deals, never throwing up wood, as
Or
we call it. Or
let's take even a less complicated approach. Let's say it's a trucking company,
Mhm.
right? Trucking company takes out some money, they go ahead and put it towards another truck. Well, what happens if that truck gets a flat tire? Right? You're used to that extra revenue coming in to pay back that advance, but
accidents
now
happen, life
absolutely,
happens.
it's business. Like
Sure.
and like you were saying, peaks and valleys.
Mhm.
So and I would say most, especially like beginning entrepreneurs, are not prepared for that.
Right.
So what happens? Default, judgments, all that kind of stuff. Me as a company, I was getting clawbacks, right, on our commission. So it's almost like I'm taking out a merchant cash advance for the deals I'm signing up. So what I started realizing was like, all right, what's the common denominator? Oh, most of these people's credit is bad. They
Mhm.
can't go somewhere else, or they don't know where to look to get a better financial product.
Exactly.
So started researching into credit repair and just really putting and honing in a whole program and system to help not only get the negatives and the bad things off of people's credit, but how do you build trustworthy relationships with
Exactly.
banks? It's
And-
not just about, hey, I don't have any negatives on there. I know people with 800 credit scores that can't go to the bank and get approved for anything.
Yeah, no, I mean,
Yeah.
I was one of them, so just, my experience with you has been, like, look, I've got good credit, I've got great, like, revolving, business revenues every single month, so like, what's the issue? Like,
Mm-hmm.
why won't people grant me this growth expansion capital that I need to go from, what's successful year over year scaling, to like what's kind of like, just I want to go way up here,
Yeah.
but without like having that extra leverage. And let's face it, that's what growth expansion capital is. It's
Mhm.
leverage. Without that like leverage, I'm just going to be going like at this slow, consistent pace. I want
Yeah.
to take jumps, like hurdles. So
Especially like, we talk a lot. So
Yeah.
you have the resources and tools that all you need is a little bit of capital to boom,
Mhm.
like explode, right? And that is super important. Like that's all you're missing. That's like the missing piece, right, in the puzzle.
Mhm.
So, but where do you go? Like a lot of these, if you don't know how to have certain conversations with banks, if you don't know which banks to look at,
Exactly.
right? If you don't understand that, building business credit, because in the business world, you have personal and business credit, but you want to have strong personal credit to start building the business credit.
Yeah, exactly.
you know?
So like, I mean, I could rant with you on like, so I'm just thinking so many different topics of things I want to cover, but let's go ahead, since you just touched on that, explain the differences between, personal credit, which most people are familiar with personal credit. However, you're a wealth of knowledge about what a just, your personal credit score, and let's talk about the difference of what makes up your business credit score.
Yeah,
Like,
absolutely.
Dun and Bradstreet. Like, I mean, let's talk about that from you because you're the expert.
Right. So personal credit, everybody usually they'll do like Credit Karma or something like that. Like that Vantage score was basically put together by like the credit bureaus, right? Predictability, kind of like, hey, how is this person going to operate? That's kind of like what your Vantage score is. Your FICO score is different, right? So history is big. Like how long has this person had relationships with financial institutions? That's what they're looking at. That's what that age is. Most people, they're taught, don't get credit cards, don't get loans, pay everything cash. That's all fine and dandy if you want to live that way, but you can't go to a bank and say, hey, why won't you approve me? I have an 800 credit score. They're going to say, yeah, but you've borrowed $5,000 the past 20 years. How do
Mhm.
I know that you can pay back this $50,000?
Right.
That's where having credit cards is important. Obviously, be responsible with it, but it's important.
Right.
It's like let's say a random stranger just comes up to us. It's like, hey Nate, can I borrow like 10 grand? You look at me like, Hector, have you ever let this person borrow money? No. You go to another person, hey, have you ever let this person borrow
It
money?
makes sense. It's like
No.
if somebody comes up and asks me if they want to borrow 10 grand and the most they've ever borrowed from anybody was $500 and it took them 5 months at $100 payment per month to pay that 500 back. What does that tell you about paying me 10 grand back over a
Yeah.
certain amount of time? So, I
Or
mean, that's
the
pretty
last time that happened was 10 years ago and it's never happened again since.
sure. Yep.
Right? Okay, well, that was 10 years ago. Like, you're not handling any relationships recently,
Hmm.
right? So, history is important. And then utilization on your personal credit, right? Well, okay. So, people think debt to income and utilization are the same thing. They're not, right? Debt is good. It's good to have debt, and it's usually like installment loans because it's like, okay, Nate's committed to pay back this installment loan for a mortgage, let's say 30 years.
Sure.
So, he's committed to pay that debt. That's good debt, even though some
Hmm.
people have their opinion on housing market and stuff like that. I'm just talking about like the credit report itself, or a car note. Okay, Nate's dedicated 6 years of payments. That's good. Like that means you're responsible. You're
Yeah,
dedicated as long
exactly.
as you're, again,
You're a
payments are on
commitment
time.
guy.
Right. Well, that's
Yeah.
what they want to see,
Sure.
because if I lend you money, are you committed to paying me back? That's how the banks are looking at it.
Right.
Right. Inquiries, the way they look at that is, hey, is this person asking every single neighbor on the neighborhood for money?
Hmm.
Inquiries, right? The less amount of inquiries you have in the most recent 2 years, that's what and it goes by cycles. So usually like 2 year cycles is really
Okay.
what they're, that's why if a lot of people pull up their credit report, you notice it's showing you like 2 years of history because they go by cycles,
Okay.
right? So if you have a late payment from like 4 or 5 years ago, they're not really looking at it as much as these last 24-month cycles, right?
Okay. Got it. So that's like on personal,
Mm-hmm.
on the business side, because I know there's like a business credit score,
Mm-hmm.
right? And I've recently learned about that, and thankfully mine was pretty high, so,
Yeah,
so I
yeah,
was
yeah.
excited to see that. But how does the business score work? I know it's Dun and Bradstreet
That's one of
related,
them.
right?
Yeah.
With okay, so
DNB
let's
is
start
one of
talking
them.
about
So like a
that.
paydex score. So business is looked at
Like a
completely
Duns
different.
number, like
Right. I always say go to Duns, get your business, get your Duns number. Experian has a business. Equifax has a business as well, like a business side. They're looking at it more of like how long does it take Nate to make that payment? So that net 30s, net 60s, net 90s.
sure,
So if you have a net 60, but you're paying it back in like, you're paying it, let's say, in a week or two from getting that invoice, even though you have 60 days to pay it, that shoots up your score on the business credit side, because you're not waiting till day 59 to pay that.
right,
You know what I mean? So and also the longer like the net, like
hmm,
the higher impact it'll have on your business credit,
sure,
because it's like, okay, I'm gonna give you 90 days to pay me.
hmm,
Let's see how long it takes you to pay me,
right,
right?
exactly,
So let's say you have a net 90 and you pay it in 30 days. Oh, that looks amazing on your credit, on your
right,
business
for
credit,
sure.
right? And then how big are those services? Or because there's different types. Like there is auto, you can get cars under your business credit.
Hmm.
Financial services, business services. There's different
And
categories.
just so everyone knows, like, what is the best way to check your business credit score? Do you have a resource for that?
Yeah,
Like,
Dun and Bradstreet, go to Duns, dunandbradstreet.com. Experian, go there. It does cost though. Like these aren't
Free credit reports.
Not only that, they're more, right?
Mhm.
Like I just had a client, like, this is what I help clients, and we help them build those business trade lines on there. And some of these reports cost $250.
Mhm.
You know what I mean? But it's a full breakdown on your business, because you have your business credit score, and then there's a business rating.
Sure.
So rating is like, hey, if you're out there like bidding for certain jobs, they want to look at what your business is rated. And I'm not talking like Better Business Bureau rating.
No, no, no,
There's
no,
something
no,
like
nothing
that.
like that.
You know what I mean? Like there's actual business ratings that, okay, financially responsible, does everything that they need to do to be a good candidate, for certain services.
Mhm.
And it's super important.
Yeah. So, all right. So let's give everybody sort of a use case example. Me being the testimony. Let's walk them through like what you've done to help me. Considering I never really was a big fan of credit cards,
Mm-hmm.
so I didn't have a whole lot of credit cards. There was a negative on my credit report that was pesky. That's been there forever, and I hired you and you got it removed in a couple of weeks, which
Yeah.
was thank you,
Yeah, for
because
sure.
that's just something that anybody that's going to lend you money is going to look at a negative, and it doesn't matter how long ago it was. I think that one was like, man, probably like 7 years ago or something.
No, it was like, I think it was like 5 or 6.
5 or 6, okay,
Yeah, it was
something
pretty,
around
but
that. Yeah,
the reason I say the difference is because the 7-year mark, it could have just came off, but 5 or 6 we had to do a couple
yeah,
things to it. You
but
know what I
like it
mean?
was already removed off of TransUnion, it was already removed off of Equifax, but on Experian,
It was a
it
mess.
just would not go away.
Yeah, yeah.
So, like, I guess if you want to just give us, your approach on how you help your clients, why you're better than like the Lexington laws out there, that will just send a bunch of letters and, based on the Fair Credit Reporting Act, like if they don't respond on time, then they're supposed to remove it. Like, what's your approach? Like, how did you help me that quickly? And
Yeah.
how can you help the people that are listening, which I'm pretty sure a lot of them will be interested in growth expansion capital and getting in a better position to get growth expansion capital, as long as it's not at a asinine
No, for sure.
interest rate, which I know you don't do. And that's another
Right.
thing I like about the way you work. So,
Yeah, so I mean, there's a couple pieces to what you were saying, right? From one, making sure your personal credit's where it needs to be. So the approach that, I mean, I've just taken a lot of courses. I've done a lot of research. I don't have an ego. So I join other people's mentorship courses because I feel like I can learn from everyone.
sure.
Rather they're in the beginning stages, or I mean, these guys are, the go-tos in the industry. I like to join as many as I can because I just want to learn. You know what I mean?
Yeah.
And there's certain method, like Lexington Law, cookie cutter templates. They do it for so many people. People think because they have the word law in their name that they're doing all this. No, theirs is cookie cutter templates, same templates for everybody. I mean, if
Okay.
people don't think that these credit bureaus are at least picking up on where these templates are coming from, like, then
Yeah. I
you know what I
mean,
mean. You
they
gotta
look the
start
same
using
every
common
time.
sense. Yeah,
It's just
exactly.
that somebody calling sick that day, I missed it. Maybe I don't know. Like I don't know how it
Yeah,
works. Like,
exactly. So we use, everything is custom because every client is different, right? I have a whole back end processing team. We look at the credit report, and then we use what's called like Metro 2, right? So yes, the Fair Credit Reporting Act is true, it's there, but if, just kind of a hint for everybody who's watching, pull up your credit report, look at one specific account, right? And then look at all the lines between all three bureaus.
mm-hmm.
It's supposed to match, according to law, it's supposed to match 100% identically. If not, it needs to be investigated on why it's not.
Really?
Mm-hmm.
See,
It's
I
supposed to
didn't
be
know that.
100% accurate,
I did
right?
not know that.
Not just
Interesting.
between one bureau, but all three bureaus. So if you
Otherwise,
only,
something's off and somebody needs to be called out.
yeah,
Well, what if it's two saying one thing and one? So, like in my experience,
it's
you got
not matching.
TransUnion, you got Equifax saying that like,
Two
yo,
different
Nate's
things,
good. Experience saying like, yo, Nate's not good.
right?
Like, is it an investigation of all three?
Yes, because it's supposed to be matching 100%.
Interesting.
So 100% isn't just 100% on one. 100% is 100%.
Yeah, yeah,
So it
yeah.
has to match on all three bureaus.
So that's how you call them out.
Exactly.
Interesting. Well, that's
Mhm.
cool. I love that. So yeah, definitely. Thank you for sharing that. Like, so I guess like if, with other case studies, success stories, I'd say what's your like most challenging? Like, what's been like the most ridiculous, most messed up client you had to work with, and how'd you take them from A to, you know, G or Z or whatever?
Yeah. Well, some people, I mean, they just expect just unreal. And I'm very like, even when me and you talked, I was like, probably could take this long. You're like, and you text me, you're like, didn't take that long at all, right? But
Mm-mm.
I like to set certain expectations that way, just in case it does take long, and at
Yeah.
least set the right expectations. If it happens sooner than that, great. I
Plus,
mean,
you
that's
don't
what
get
we
people
want.
texting you all day long, you know.
Yeah. Oh no. If I were to show you one of my phones, I'd be like, how do you not cuss this person out, right?
Yeah.
But managing the expectations correctly is one of the first things that I do.
Mhm.
Now, as far as like one of the craziest things, like, so the hardest thing to remove is a late payment on an active account, because we don't want that account removed. We just want it fixed,
Yeah.
right? There's ways to go about that. Same thing
And
like
and
what
that actually, being very, humble and transparent to the viewers, that was something that, we noticed on mine. And
mm-hmm,
like, there was some fraudulent activity that went on with my bank accounts over the holidays.
and it
Um,
happens to a lot of people.
and of course, especially over
Mm-hmm.
the holidays, I ended up getting like, my Chase cards like replaced and my Credit One cards like replaced several times over the holidays, which was super frustrating. But while that happened, if it's anything that's attached to like my, business vendor, like auto pays, like all the tech as a SaaS tech guy, I've got like, was over 60, that would auto ding my card on auto pay every single month. So if I get a new card number, oh my
You gotta go
God,
through
dude, it's a
all that.
pain, dude. And
Mm-hmm.
that happened to me multiple times over the holidays. So, there was one that I missed. I thought they had the new card, but they didn't. So it was a late payment and I didn't find out about it till later. And then you told me about it. And I was like, oh man, dude, like we're so close
Yeah,
to
yeah.
getting to where I need to be so I can get that spike of, growth expansion. But, we got to clear this up. And you told me exactly how to do it. We did it together. And, so yeah, you said it's one of the hardest things to get removed, but we did that expeditiously as well. So
Yeah, yeah. And
that's
imagine,
another testimony to you.
I had a guy with literally all his cars, and he had multiple cars, all his cars, all his more. He had like 2 or 3 houses. Like, I'm talking like maybe like 15 accounts with late payments on all of them. So, and we have to keep them like they're good accounts. So we can't just get rid of the account. We have to keep it active. He's like, hey, can you get this done in like 2 months? It's like, you got to be kidding me. You
Mm.
know what I mean? Like, this is a lot of work that needs to be done. So just having to manage that expectations for him like constantly was tough, because he was a big name
So speaking of
person.
expectations, let's talk a little bit about like, um, I don't know if you want to put into buckets, like, let's say you are at this revenue on a monthly, quarterly, annual basis, versus, a higher bucket. Like, how can people expect, like, if I've got this credit score, that's good on personal, and I've got this credit score that's good on business, and I also have a great history, um, you know, let's say my business is doing $500,000 a year or $1 million a year or 5 million. Like, what can you expect percentage wise, if this is even a relevant question without too many variables, to receive whenever you're like, and how much should you get as like, say, like an SBA loan or a line of credit? Like, I'm just trying to give people an idea of the range
Yeah.
of like, this is what I'm set up for now. And if I go to Angel Business Inc. and I need growth expansion capital, this is what I could expect.
Well, what we do is we put a whole plan, because there's so much
It's a
money that can
lot of
get.
variables. Yeah.
Yeah, but not only that, like, okay, so you have your 3 business bureau. I'm sorry, you have your 3 credit bureaus, right? Equifax, Experian, TransUnion. So we know which banks pull from which credit bureaus. So I can say, which we're getting ready to do with you, right? I'm gonna use 5 banks from this credit bureau,
Mm-hmm.
right? 5 banks from this one, 5. Now let's just say each bank only gave you $15,000 times 5,
Mm-hmm.
right? And then after that, that's gonna report to your business, not to your personal, so we could take those inquiries off and go do it again.
Interesting.
So we can, like, I'll give you an example. A client that we're working on right now. She has a
Okay.
really good, strong credit profile. We got her approved. We did 3 banks so far. She's at 80K. By the time we're done in 6 months, she'll have 500 grand. There's business credit cards,
Wow.
okay? Because there's,
That's interesting.
think about it: national banks, regional banks, city banks, credit unions.
Sure.
So you can
And
go.
is
Even if
there
they only
like
give you 10
some
grand.
sort of rule of thumb that you follow when it comes to like, you got somebody set up so that they can get, some high limit credit cards, and then, you do that magic like you were just talking about, like what do you look for in the, APRs, like the interest
So
rates?
that those range completely.
Sure.
There's 0%, right? There's introductory promos. Certain banks are running certain promotional offers, right? So that'll always range. But one thing I always tell my client, just be responsible. Because and here's the thing too, like you can have it, let's say intro 0% intro for 12 months. Month 11 you're like, I don't know what I'm gonna do. Like I still have 10 grand in my balance, and you have what's called a balance transfer. I can go ahead and take whatever's your remaining balance. We'll go get you another card with a balance transfer option. Transfer the balance. If it's at 0%,
Yeah.
perfect. Now you got a whole another 12 months at 0%. They might charge you like a 3% balance transfer.
And that's why you put a whole plan together, because like you're
Exactly.
looking at like the terms of every single thing that you're, leveraging. That's
And
smart.
that's the difference between, I'm not just going to be like, hey, here's your money, good luck. Like, hey, most of my clients, they stay with me for years because they're constantly growing. Because again, like resources, like, hey, once we put this plan in place, we get them the money. It's like, all right, what are you doing with this money? This isn't just, even though some people will do whatever they do with their money, but I want my clients to be successful. That's why I left the merchant cash advance industry, right? Like, I want to make sure that they're putting their capital to good use, that way they're able to grow. And if they don't, I have resource. Let's say somebody who's brand new in business, and take in mind, I could do this with pre-revenue companies. They don't have to be making tons of revenue. They don't have to be making revenue to do this.
Yeah, that was gonna be another question is, how established do you have to be as a business? Like
to be registered.
My latest company, Invaluable, has been in business for just going on 7 years. So, I've got a lot of consistent, year-over-year growth, scalability. But, if you don't, what does that difference look like?
So the difference is how much we can keep going for, because now with you, SBAs, lines of credit, there's a lot of things that we talked about that we're going to be able to do for you because you have all this revenue coming in, right? Because now you have cash to back. Because, all right, let's break it down. Credit cards, it's digital. Let's be honest. It's digital currency, basically. That's what it is, right? These banks take insurance out on that, whatever. Lines of credit, you're pulling cash. So let's say they extend up $50,000.
Like a bank vault, yeah.
Right. You expend a $50,000 line of credit. You pull $20,000 out of it. You're paying on the $20,000 that you pulled, but you still have $30,000 you could pull from again. Once you pay that $20,000, you could pull that again. Lines of credit also, like when you pull that money, like, hey, I'm gonna select a 12-month term. So let's say 12-month, 1.5% per month, right? Okay. So you're pulling based off a term, and then term loans it's a term from day one. But the reason I use term loans kind of last is you're paying money on day one. If I get you a $50,000 credit card, you pay on what you use.
So let's say you got like $100,000 line of credit, like that's your bank vault where you can go and pull, cash. Are there any limitations to, how much you pull out at a time?
No.
Can you pull out the full 100,000 and then just pay interest on it? Like, and what interest cap is like what you would consider to be like, oh, no way, we're not taking that line of credit, it's too high?
Honestly, here's how I look at it. Whatever you could put your money to use for, if it's going to be making you more, right? So let's just say
exactly,
you're gonna put it into, because lines of credit are really big for like people in the real estate industry.
Sure,
because they could pull that cash out.
Especially you work with a title guy, you work with a wholesaler, reno, and then like
So
I get it.
You pull the cash out, you could buy this asset, and let's say it's 18% APR, which you divide that by 12 months, you're paying 1.5% per month.
It's just moving money around, yeah. And it's securing deals.
Yeah, it's fine because even if you're making, let's say, a 20% overage on your money,
it's just short-term leverage. Yeah.
Yeah.
You better be confident in what you're doing.
And let's say that you use it strategically and you pay that back first, right? You pay all that money back first. You have a whole another 100 I can go put towards another deal. That's paid off. This deal is already cash flowing and paying me monthly. So now there's no interest coming out of that. It's just making me money. I have a whole nother $100,000 line that I could pull from again.
Yeah,
and then
which
go
is
put it
huge.
into another deal.
Okay, so you talked about credit cards. I think most people are pretty familiar with credit cards. You mentioned it as like, digital currency, banks insured. You also just brought up lines of credit. So let's talk about like SBA loans. And I know like those are kind of scarce now, right?
Yeah, like I work. So me personally, like I'm real big on relationships. So I have access to private family offices, single family office, multifamily office. I have access to capital firms, hedge funds, and a lot of times, like I have access to an SBA fast track program. Right, the capital firm's been vetted. They can go ahead and facilitate that SBA. That's a 10-year term. Most, not all SBAs, they'll go, well, no, they do check prime. So whatever the going rate is in the market, plus, like, let's say prime plus 3 would be, if the market is at like a 8% plus 3%. So now you're paying like 11% on the money.
Mm-hmm.
Some of them are fixed, which means that's it. That's, if you're in a 10-year fixed, that's what you're paying interest for 10 years.
Right, right.
If it's variable, because the market's always shifting.
Sure.
So always check your paperwork to see if
Yeah.
you're on a variable or a fixed rate, because variable could change next month.
Mm.
And now next month, your payment is going to be different because the market changed.
Yeah, something with a mortgage or like anything like that. So, question: if let's say you've got your growth expansion capital. Let's say it's $500,000.
Mm-hmm.
Let's say you need 250,000, like just to really just get done what you need to get done now. But you still got another 250,000 that you can get creative with, grow the business with, or whatever. Is it frowned upon to move that money into some sort of like interest-bearing account?
I don't,
Or just like I don't even know if
I
like you can do that.
I consider what's like creative finance. Like I become very creative with the plans that we put in place.
Sure.
So if you have to take a line of credit out, take some of that cash out, put it into a revenue producing program, then
Sure.
do it, because then you could take that.
You're responsible for it either way.
Right. But
So-
then you could take that cash, put it back into your business, because it's making you, a bigger interest return on what you're paying. And you could put that into something. Like, it's just like diversifying, you know what I mean? Your portfolio.
Mhm.
Because if I could take this money, let's say I could put it into this that's going to produce me more revenue than my main business.
Exactly. Now, man, like I was very, very choosy about who I wanted to work with whenever it came down to this. I mean, if you ask for, any sort of help when it comes to business financing on like an aggregator site, it's aggravating. Those guys will hit you up 20 times a day. Like it's ridiculous. So, now I'm just like, no, I already found somebody, and you were referred to me too by one of my business partners. So, yeah, I highly, highly recommend this guy for anything that is, growth expansion, capital related, credit repair, but not just that, resources in other ways of helping your business. So, talk to me a bit about some of your other passions. Like, I know you got, 700, 800 men club.
Yeah.
What is that?
So what I've done is, and a couple of things kind of sparked this. For one, I was in an insane car accident in January 4th, 2021. A year later, I lose one of my really, really close friends to suicide, military vet. And it sparked me because like
PTSD or yeah, man.
So some people see my car accident, they're like, Hector, how, like, I have a couple scars here and there, but no broken bones. We were talking about my back, doing a couple therapies and stuff like that for it. But some people see my accident, 2 people died in it, and they're like, how did you walk out, right? So I feel like that really sparked my passion. Like I need to, because just like that, like what am I leaving my wife and kids?
Sure.
You know what I mean? So it's like, all right, I've always been pretty successful in my life. Been in the call center, been in sales since I was a teenager. Been in the call center, like I've done, some pretty good things. Nothing like, hey, I made it, until after the car accident. And then because after that I was like, all right, you got to find like legacy.
Sure.
Right? So 700, 800 men club.
You got to find purpose.
Yeah. And 700 and 800 men club has been my passion. When my friend passed, I was like, kind of like, I went through, because I had PTSD from the car accident. Then he passes, and it kind of like
That'll haunt you.
Yeah, because I was talking to him the day before he did it.
Mm.
So it's like, why didn't I catch it, right?
Yeah.
And then it like I said, I've been really blessed with some relationships. I deal with Nations United for Peace, have access to global relationships, and bringing in all those relationships into like one place, but specifically men, because from a PTSD standpoint, like we're taught man up, right?
Exactly.
Hold it in, don't cry.
Yeah.
All that
Don't be
stuff.
a little.
Yeah, right.
Exactly.
But we're human at the same time.
Sure.
We need a place to vent. We need people that we can talk to who might be experiencing the same type of feelings. So that's where 700 and 800 Men Club came from. So 700 Men Club is I want to get men to a 700 credit score, right? Help them with business fund, help if they don't know what they want to do.
Man, yeah, there's somebody I definitely want to introduce you to. Does something very similar. And he's actually here local in Orlando. There's two people actually I'd like to introduce you to that have like a very like similar, just I guess spark and passion and drive. I even noticed on your LinkedIn profile, you want to turn homeless shelters into resource centers. So
Yeah,
talk a little bit about that too.
yeah. So
Which is really cool, by the way. Of my respect.
Thank you. I'm from North Boston, and fortunately, my uncle was a heroin addict. He just beat it. He's like 3 years. Like, man, the nicest guy.
Wow, most people don't.
No, absolutely. It took him a long time. And again, like just my past is what sparked 800 Men, because I'm gonna take 700 and 800 Men Club and put that into the homeless shelters. So it's almost like a rehab center. Like you come in there, we get you clean, whether it's drugs, alcohol, whatever it is. We get your credit right. We're gonna fix your credit, make sure that you're good. If you don't know what you want to do when you leave, then we're gonna teach you a trade, right? Once we teach you a trade, we got your bit. Like now, I'm putting you back in the world as an asset.
That's smart.
You know what I mean? I've taught you a certain amount of things to where, and you can always come back. It's not like, hey, good luck, like most of the shelters do or the rehab centers do. They want you to keep coming back just to make money off of you.
Yeah.
We're trying to make you an asset.
Exactly.
Right? Like if you're having, especially if you have PTSD and you need to come back, we're here for you.
Yeah, exactly.
Right? I've already created like Discord groups for the 700, 800 Men Club, just trying to make it a community where we can all like conversate. You know what I mean?
Is that off the ground yet from like a facility standpoint, or is it
no, just the community, the Discord,
right now, right?
The concept, right? I work with Nations United for Peace, so we can actually build facilities for a third of the cost. Well, any real estate really, but I'm going to be using that technology to help build the shelters. You know what I mean? That's what I'm using to build it, and then my resources, we're going to implement them in there and to start helping people.
What better guy to find the leverage to get that off the ground than you? You know? So, well, man, I'd be very interested in helping you any way I can with that. So, keep me abreast on that.
Yeah,
I'll make some introductions to some people that I know that have very similar mindset and goals around here. But man, that's super cool, Hector. It's just always a pleasure talking to you, man. It's a wealth of knowledge. You being an entrepreneur from such a young age, like out of necessity, which I relate a lot to. So one other question that I have, considering this is the big data show and we're all things tech, innovation, and futurism, what sort of technologies are you guys using? Like, systems, processes, like, are you guys automating a lot of things? What does that look like within, your business, or should I say businesses?
Yeah. So, having a CRM is so important to, I always say this, like, if you don't build your business to scale, you build it to fail.
Sure.
And systems is usually the contributing factor to that. Because if your systems aren't built in the beginning stages, like I've seen unicorns all day long where boom, the business is just booming and then they fail. You're like, what happened? Well, they didn't have their systems in place, or while they were growing, they didn't put their systems in place to handle that scalability because
exactly, scalability, man. Put it in gear, you'll disappear, man.
Well, it's like, think about like I'm big on like Grant Cardone, Brandon Dawson, and one of those, then the points, like they talk about break points in business. The first one, they say it all the time, systems. So systems is big. We have our CRM, and then we've built automations within our systems, like especially for like the credit repair side, where it's automatically updating our clients, so they don't have to like text us or call us 24/7, like what's going on. We have a whole back end system. They can log into their portal, check their credit score, see what we're doing. But without systems, man, like
Yeah, then it's
it'd be
chaos.
impossible.
And it's
Yeah.
chaos, and it's just a lot of time and talent,
Mhm.
which is exhausting. You have absolutely no life,
I already don't have
unless you automate your life,
yeah.
So like, yeah, man, I super respect that. My company, Invatamate, innovate and automate. Like we find something innovative, we're like, okay, cool. Well, it's going to be a real pain unless we automate it into processes so that, it just really runs on autopilot. It's super important. So that's cool. Awesome. Automations and processes and procedures, man.
Yeah, it's
Big
super
fan.
important because if you think about it, like like you're an even if you have 100 people, like there's still a certain amount of time in the day. There's only so much a certain person could do, right? So if you could take that off of your plate, that means you could go do something to help grow the business instead of emailing a client a certain update.
Exactly. You end up going like this versus consistently going like this.
Exactly.
So, like how, like what is your existing bandwidth based on your current systems, procedures, protocols, processes, whatever you want to call it, your automations? Like, can you take on 10 new clients today?
Yeah. I
Can
could
you take on 50? Like, I mean,
I could take on 10 clients within the next 10 minutes now because of the systems.
Because of the systems. That's
Right.
what I wanted to hear.
Yeah,
That's
but
really cool.
beforehand, no. Like before, I was like, especially when I first started, like it was like all manual, and it was a nightmare until we started putting system in place. Like I could literally send out a link right now. Everybody could sign up at the exact same time. All of them can be onboarded at the exact same time.
That's huge. So like, I wonder, just because, you and I, like, I mean, you're my boy, so, I'll text you to find out what's going on. I'm not going to log in. Like, I'm that guy. I'm just going to, say like, hey man, you need anything from me? Like, it's ball in your court, like whatever. But I'm curious, like how much of that is consistent across your other clients. But it sounds like they can just, go completely digital, log in, and they can figure everything
some
out.
of them will try it. I'm like, just log into your portal.
Yeah.
You know what I mean? It's different. Like, me and you, like we work on a couple of things together. You've introduced me to, so it's different, right?
Yeah.
But a lot of my other clients who they don't know me, they'll be like, hey, can I? I was like, can you log into your portal?
Yeah,
like,
there you go.
It's all set up, but
that's what you want it to be.
Exactly. And for all business owners and entrepreneurs, like that's really where you want to be. Where, hey, can you? And then, hey, I can log in on my phone and give someone an update because of the systems that are put in place. I don't have to like try to guess what their logins are or what this is, what that is. I can literally go to my CRM, look up the information, log into the portal, and then have an update for them.
Yeah, no, I mean, like the whole process with you has been really, really very simple. You ask me for a few things in the beginning, you get in there, you figure it out, and you're like, okay, this is what we're gonna do. And I'm like, oh man, I don't know. You're like, you're just gonna have to trust me on this one, man. And I'm like, you're lucky I do trust you, because normally I'd be like, no, I'm not doing that. But you were right every single time. You were right. So.
And it happens, man. It's a journey, like especially if something's new. Usually, if something's new, it's uncomfortable, right? So sometimes we just have to break through being uncomfortable, knowing that, hey, when I finish this, like I get access to XYZ, and we've built the systems in place. So once our clients kind of break that uncomfortableness, like, okay, everything else is automated, so everything else starts happening faster, But man, like systems is super important to my company.
Yeah, so you hear that, guys? If you want to work with this guy, then he's got systems, processes, so like you're going to be able to just get in there and experience what I've experienced with Hector. And I'll drop a lot of links in the bottom of this episode for you, so that you can look into a lot of things we've covered that are related to what this guy's doing. Hector, such a pleasure to have you here, man. Thanks for being on the show.
Thank you.